Welcome to my channel. Dave Ganderellis here. Today I'm going to talk about another set of 4 cryptos that we've been talking about over the past couple days and weeks. If you're a first time coming and you're not subscribed, please consider subscribing and clicking the little bell. Be sure to look in the video description as there's ways to contact me, my other opportunities, and timestamps so that if you're interested in only one of the cryptos that I'm talking about today, you could jump to that part of the video and focus on that if you don't have time to watch the whole video. I look forward for feedback. Please comment, like, and share. Let me know what other cryptos you'd like me to review and take a look at. This is not a signals platform. This is more of an educational platform where I explain my thoughts and my process of going through the charts and putting lines on there and different patterns and just kind of talking through the mindset and the way you have to come up with a trading plan for yourself and such. So I don't consider this a signals platform. I'm not providing signals to you, but I'm kind of talking out loud to you guys on how I go through and how I would be approaching a trade if I were to do so. So just make sure you do your own analysis and come up with your own trading plan and entries and exits, and use the information I'm sharing here. And please contact and look at other people on YouTube, and between all of us, hopefully you'll practice and gain the skill set for yourself to do the analysis on your own and become a successful trader of crypto and or forex or other commodities. All right, so with that being said, let's bring in the charts here. Again, I'm gonna have a timestamp in the video description so you could jump right to this, but if you're already hearing this, you already listened to what I had to say, so kind of meaningless. But anyway, let's start from left to right. We've kind of talked about VeChain in the past. We could kind of see that it did break out. And believe it or not, compared to what's happening right now with Bitcoin and Ethereum, VeChain is faring very well. You know, we're not at our target yet, but considering, I mean, it was a retracement. We were really, really close, but it did break up and it stayed above. So if you guys are in a trade, you know, if you took this breakout, certainly consider putting a stop loss somewhere down here below this support structure that we see here. And again, you know, normally, I drew it on one of the other charts, normally you see something like this, and then it goes up. So, you know, right now it's going up. You just got to consider what you want to take as profits. There's nothing wrong with taking stuff off the table. You know, just like you might have dollar cost averaged in, you should be dollar cost averaging out. And, you know, just kind of set yourself up to lock in those gains so that when the next retrace happens, you can get in again, and maybe a new pattern will start showing up here. Maybe we'll have another ascending wedge or triangle showing up here. So maybe it'll create another base and start doing the same thing. So, you know, you get out and then wait for the retrace, and you can start getting in and go from there. So really, that's all I gotta say about that. I mean, if you're currently in a trade, just do your risk management and consider taking profits. There's nothing wrong with taking profits. All right, next one. Oh, this is Voyager. So Voyager is kind of still sitting in its let me get out of this. Voyager is kind of still sitting in this wedge pattern, this triangle pattern. You know, maybe this is more of a channel here rather than a wedge or a triangle. So really, what you're still doing, you're still waiting for the breakout. You know, if you want to be conservative, really just try to get the maximum number of wicks and really wait for a confirmation on the breakout. So if you're waiting up here, again, we already had this target. You could maybe modify it a little bit based on the shortening of this channel. Maybe it's more something along these lines. Just remember there's going to be some resistance here at this previous high, and the target somewhere up here. So just be smart. Make sure you enter a stop loss if you take the trade, and consider taking somebody out of here. And as I mentioned before, as this breakout happens, maybe you'll see a check. Maybe it'll come up here and it'll check again. Maybe it'll come up here and check again. and continue. Every time that happens, you really want to consider moving your stop loss right below these pivots and lock in. You know, if you're in a trade here, you wait for that, and once it's up here, you know, by you locking, you know, putting your stop loss up there, you're guaranteeing yourself, you know, either a break even if you set it right here, or after this pivot, and if it shows support at this level now, you've locked in this amount of profit, this arrow, you know, whatever that value is. And then as it goes higher, if you decide to do it up here, then you lock in even further, because now, you know, you have that much of a profit that you're guaranteeing yourself. At a minimum, you want to be break even. You want to make sure as price action goes up, you bring in your stop loss to your entry or a little bit above to cover the costs. Take a little bit off the table as it breaches the all-time high here, and then you got a risk-free trade, and you can let it breathe. And if it comes back down, either you're going to break even, you're not going to lose any money, or if you bring your stop loss up here, then you got a guaranteed lock-in of additional profits, and you got to figure that out for yourself. But that would be my strategy. I'd be waiting for the breakout. This is very bullish. If you look at the Fibonacci, let's just see what it looks like. Yeah, so it bounced off the 5, the 5.5, and even almost came down to touching the 618. So this is a nice reaction off that area. Hopefully you dollar cost averaged in down in that area down here. And hopefully you got into a trade down in here if you're in already. If not, you're waiting for the breakout, right? So depending on if you played the Fibonacci retracement, you might be in already here. Or if you're waiting for the actual breakout of this upper trend line, then you're not in yet. But it's doing very well compared to Bitcoin. Bitcoin and Ethereum kind of took a little bit of a dump earlier today. So last night and today. So that's all I got to say about that. Wait for the breakout. If you're already in down here, if you already had this Fibonacci on the chart and you got into a trade, you're in good shape. Just continue monitoring it, and once it breaks out and checks, certainly lock yourself into a profitable trade if you're already in, or if not, lock into yourself, you know, risk management so you don't lose any money or not too much money. You know, rule of thumb is somewhere between 2 and 3% of your equity. Like if you have like a $1,000 account, you know, you want to risk only 3% of that on any trade. So you got to figure out where to put your stop losses, or maybe 5%. It depends on your risk tolerance. You got to figure out what you're willing to risk, but you don't want to risk your entire account on a single trade. You have to be smart about it. So figure out what your risk to reward is. Figure out how much breathing room you want to give it in terms of a stop loss, and equate that to a certain percentage of your account. You know, if you have a $1,000 account, you're willing to risk 5%. Then what's you know, you got to figure out what's 5% of 1,000. So you take out your calculator. So if you want to risk at any one trade 5%, then you got to multiply it by 5%, and then you got to set your stop loss appropriately, where you'll only lose $50 if the trade goes the wrong way. So you got to do risk management. All right. So next chart, AAVE. All right. So AAVE, I mentioned this a couple days ago to you. Still staying within the pattern. You know, just like all the charts seem to be looking, they're all retracing. They're all bouncing off the 618 and the 65, and you know, now it's kind of consolidating at the 0.5. And the hope is that it's gonna, you know, based on this base, let's do the base. Hope is once it breaks out, let me put on the log, it's a little easier to view. Depending on where it breaks out, you know, you got this target from the algos and you got this target from the pattern. So again, wait for the breakout, and then continue to make, you know, like I've said in the past, you know, there's going to be some hesitation up here in the previous high. There's going to be, you know, up. Let's see where else. There's some stuff going on here. So really, this is where we really needed to break through some resistance in this area. So we might see a pretty good move, an impulsive move up once it gets through this level of resistance. So support, 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 and then resistance, resistance, comes up, kind of follows. Now it's resistance again. So there's a lot of the bears and the bulls are kind of fighting it out here, trying to figure out who's going to win. So, just keep that in mind, that this is probably the area where that was a pain in the butt. This is probably going to be the area of decision for what direction this is going to take. So we'll probably see if it breaks out. It's probably going to be a pretty impressive move on the upside. Again, this is still, even if you don't account this descending triangle, this is also kind of like a wedge in a way, and it's a bullish wedge. A downward pointing wedge in an uptrend is bullish. So, you could kind of see where kind of like a wedge forming here, and there's going to be a decision point coming soon on which way it's going to go. If you want to, there's no patterns, but what you can do is you could also throw a pitchfork on this pivot from high to low. Right now we don't need these. You can kind of throw this on there and then kind of just try to touch down here. You could kind of see that there's a touch here. This pivot, this point right here and this point right here seems to be the touch. So again, we mentioned it's an 80% chance that it's going to hit the median line. So however long it takes to start doing that, if it starts following this channel and it stays within this this pitchfork, it's going to naturally be driven higher on its own if it's going to respect this pitchfork. So it's just kind of like it's kind of like a channel that's kind of forming based on these reactions to this outer pitchfork line, and you could kind of see what's going to happen here. On the downside, you could also do this. You could go from down here to up here, and you could kind of pick the points of interest, kind of like the top side of that triangle, and you could kind of see where it's going to squeeze into a position here where it's going to have to make a decision to follow the upward pointing pitchfork or the down. So somewhere over here, and especially with this crossover right here, that's a high, like it becomes volatile. Price action tends to react when these crosses happen. Every time there's a cross, there tends to be price action changes. Like for example, like you can see this right here. You see how they cross and then all of a sudden it moved. So you could kind of expect maybe something happening over here, which is 7 days from now. We're on a high time frame chart, so we could always drive down lower here and look at this a little closer. But once you throw these pitchforks on here, you can start seeing where reactions are happening. Like, is this gonna? And then when you go into a lower time frame, you can really hone in on this and really get the right touches. And you can start seeing how you start seeing further reactions happening to these levels. When you start zooming in tighter, you can see how, look, it picked that one off right there. And right here, there was resistance, some wicks, some, right here, we're still off a tiny bit. Like you really want to get tight on this. You can even do it even more and like kind of really pick. And then at that point you could start seeing how you have action there. You might see something happening soon when it comes over here, this cross. Those are all, okay, see, look at all these touches and these wicks, support over here. So this kind of shows you more details, of what's happening when you throw these pitchforks on here. And if you start seeing like it's really respecting this, these are good times to take, like once you see this touch a couple times and bounce off of it, then depending on where you're trying to get in and where the price action is, when it's approaching this outer line, it's a higher probability entry if you can catch the price action where it's just bouncing off this line by a pip or so, or what we call pips in Forex. But here it's, however you're trading, $1 or whatever it is. If you can pick those points where you're just taking a trade exactly, like for example, if you think it's going to respect it and it's approaching this cross, price action stays sideways here, you take a trade right here, possibly going to give you some good movement pretty quickly. So it's just another tool for you to kind of put on the chart and give you an extra insight on what price action is doing. Fibonacci, Pitchforks, and those are the support and resistance line. Those are the three things that you should learn, very well, and just practice on the charts. Throw this on here and see what happens. It doesn't mean just because you're doing this you have to take a trade, but it's nice, like earlier when I was telling you, I was kind of explaining to you how things come back and check. It was ironic and really nice to see how price action actually followed exactly what I drew in here. So you could kind of like, all right, you could kind of guess what you think's going to happen. Maybe, not a highlighter, brush. It hasn't hit the median line. So maybe, as this approaches this, maybe it starts going up, and you can kind of like figure out what you think the price action is going to do, and then come back and look at it and see if it did what you thought it did. And right here is a breakout. This is and again, this is a resistance area, so it's a lot of consolidation. It's going to be a big fight to get out of here. But if it gets out of here, you got all these other pivots and all these other resistance levels to worry about. This is the big one. But it can get to the median line before it has to fight through this. But if it takes longer, the longer it takes, then the harder it's going to be to hit this median line, and it's going to need a good push to get there. So anyway, I'll leave that here. That's not really my idea of where it's going to go, but it's just something you should think about doing for yourself and come up with, like, all right, this is where I think it's going to break. This is where I think it's going to go. Use the base of this descending triangle to figure out where the target could be. Use the Fibonacci retracement and extensions to figure out where the algo targets are, where there's going to be typical bounces off the fib levels. You can see down here. Oop. You can see down here, in addition to the pitchfork, you gotta come in and always fix these up too as well. But you can see how, look, you can see reactions again on this outer band of this pitchfork. So that tells you that, when price action comes down here and tests it again, there might be the same kind of response. Now, the lower the time frame, the better resolution you can get to really get those wicks to really go off those pitchfork lines. And they're really, like, when you start doing that, you can really start seeing how they're going to bounce maybe between these two. And you can kind of, like I mentioned earlier, you could see where there's going to be decision points coming when these two pitchforks cross each other, and there's going to be basically like a hard fork, right? It's got to decide which way it's going to go. And right here, is where that's going to be. So this should be on your target of where you're going to watch to see what price decides to do. And I'll leave that there. We could come back to another day when we review this chart again and see what happens. All right, so next one is Graft. It's kind of taking the path that I kind of mentioned. It's a little more drawn out. It's actually considering this support now. So it is staying above it, which is good on the higher time frame. Now we just got to see if it's going to maybe when Bitcoin and everything responds and goes positive again, this is when it starts taking off. So right now there's still nothing to do. Really you got to decide when you're going to get into the trade if you're not in already. And to do that, you can, again, like always, put the Fibonacci retracement tool on here. Figure it out. Alright, so it's at the 0.5, which is not a bad time. Again, I kind of repeat myself, and I'm saying the same thing over and over, but you might be just watching this for the first time. These tend to be the area of reaction as a retracement happens. In a strong market, in a strong bull run or strong trending market, retracements are normally not too deep. Sometimes you could even see them respond on the 38.2 if it's really strong. But for sure, by the time it starts hitting the 0.5, the 0.55, the 618, or the 6.5, this is the area where, if you were going to consider getting into a trade, you should start dollar cost averaging into a position as price action hits these areas. Now, one can say that this already happened down here, and right now we're kind of creating a new base. So you got to just decide what's good for you. This right here is kind of the point of no return. If it starts going lower than that, it's going to probably tend to go even lower down to like the 786. So, this would be the last entry that you would take if you're thinking it's going to bounce and go up. Now, graph has been doing very well. So there's nothing wrong with it consolidating sideways for a while to create a new base before it takes off again. It didn't really sit too long here, although we're on a daily, so this is a couple weeks. But once it pulled up here, this is not a bad thing for it to kind of consolidate and create a new base for when it takes off again. In the bigger picture, when it takes off, if it's created that base, you're hoping when this finally goes up, that now because of that, when it comes back down to test, it's going to find support here and it's not going to go any lower than here, and then it could go back up. So that's why by creating this price action area of support, you've kind of created a new base that ideally when the breakout happens, and it might come down to retrace, ideally it doesn't go any lower than the previous high, but if it does, you got all this support area to ideally keep it above it. So that's why when, right now as it's coming down here, if it does what I just said, you're in the trade somewhere down here, and you could put your stop loss somewhere up here, and you can guarantee yourself a certain profit level based on when you got in. So you could take profits as it goes higher here, but if you're leaving some on the table, you have a high probability of it staying on top of this level now because it's created that level of activity for a while. So the longer it goes sideways, it gets built up momentum to break either up or down, and you just got to kind of sit back and wait for that to happen. All right, so I think with that being said, we're done for now. So I'll put timestamps in the video, but if you're listening at this long, you've already heard everything I had to say. So consider subscribing to my channel, like, share, comment, follow me, look in the video description for other opportunities that I'm involved in that can generate you streams of income. Check out some of the other cryptos in my videos, and certainly comment for any cryptos in particular that you'd want me to kind of take a look at and see what my thoughts are. Now again, these, I don't look at these every day, so what we're doing here is we're kind of doing it together, but you got to kind of follow these and start seeing what their characteristics, what their personalities are. Each one of these coins are acting a different way. Some of them might follow the path of Bitcoin and Ethereum. Some of them might act differently, and you got to figure out, are they correlated? Are they uncorrelated? Are they inversely correlated? But the big picture of the cycles historically has been Bitcoin kind of leads the charge. When that cycle is at the end or coming to an end, you're going to start seeing Ethereum leading the charge. And then after Ethereum kind of peters out and when you start seeing altcoins going, then you know the full cycle has kind of ended. And the last cycle to end is the altcoins. So you should look at Bitcoin, followed by Ethereum, followed by the other coins. Now, again, I mentioned in the other video, Cardano, is going to find its place in the top 5 at some point. There's even speculation down the road that it might flip the coin with Ethereum and take over, depending on how much Ethereum drags their feet on the upgrades to eliminate this gas fee issue. So we'll see what happens. Right now, I think this cycle is still Ethereum spotlight, but there's nothing wrong with building a position in Cardano, and I think there's going to be enough money out there for both of them to do well, and nothing wrong with having multiple coins in the same area to kind of hedge your bets, right? So with that being said, that's all I gotta say about these 4 charts. That'll probably be the last video for tonight, but I'll do independent videos if it requires immediate information. But in general, I'm gonna try and keep it to 4 at a time and put timestamps in the video from here on out, just to kind of eliminate how many videos I gotta put out, how many video descriptions I gotta create, and all that kind of stuff. Plus, just look at the video description and you can go to the specific information that you're interested in. And it'll be easier for all of us. All right, take care, guys. Have a great night.